So you need a little bit of capital to go ahead and put down payment for your next home that you're trying to purchase, because you're trying to sell the one that you're initially at, but you don't want to lose out on the next one. Or you're an investor. You're an investor that you need to free up some cash right now, but you're waiting on a sale of property and you don't have the capital to go ahead and get into the next property, and you know the deal is just too good to mess up. Well, in this video, we're gonna go ahead and explain in detail what a bridge loan is, to bridge the gaps of finance and everybody that's watching this video. Hey, what's up, guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So there's something that's called a bridge loan. Now, the bridge loan, it's ideal for one or two people, okay? So a bridge loan is good for, like, let's say, for instance, you have a property that you're trying to, you live in right now. You have a mortgage on it and everything is like, dialed in, you're good to go. But you don't have the money down for your next property. You need that little bit of money to go ahead and get you from one property over to the next property. Well, a bridge loan is something that we don't care about anything as far as, like, how much money you have in your account. We don't care about the down payment. We don't care about any of that stuff. We just care about how much money is going to come from the initial property onto the next property. What's the difference? So what we do is we're going to go ahead and look at the property. We're going to send an appraiser. We're going to go ahead and, after we do the appraisal, we're going to see what the loan to value is on this one, to go ahead and make sure that when we do sell this, we're going to go ahead and send the funds on over to go ahead and pay off the bridge loan. Now, this is also good for investors that are trying to get into one property to another property. Like, let's say, for instance, all your money is tied up into this deal and you're trying to fix it up, or your multiple deals, whatever it might be. And another really good property comes around and you're like, oh, I gotta go get it. Well, this is a way to go ahead and get that money to go ahead and put into the new property. Now, this is something that could go on for 3 years. Mind you, this is not the best of loans to get if you think that you're gonna go ahead and do for 3 years. Don't do the 3-year term. Think this is short term. This is just to go ahead and gap the amount of time that I need to go ahead and wait for this property to sell in order for me to get into this other property. This is not a loan to hold. This is not a loan to go ahead and wait for the 3 years max. It's stupid to wait 3 max, because these are short-term temporary loans, just to go ahead and help you get from one area to another area, sell this house to get into this other house. Because let's say you don't want to wait, you don't want to do anything, you're just like, you know what, let me get into this other house. Or it's like a house and investment that you just can't slip up. So let's go ahead and go with a few of the highlights of this loan product to go ahead and give you an idea of what's actually required. Now that we went ahead and established who is it for, what is the purpose of it. It is for anybody who has a primary residence and they're looking to buy a second one, but they are waiting for the proceeds of that house to go ahead and cover the down payment for the next house. So this is like a down payment assistance, but you're using your own house to go ahead and get it. And we already know you have that money in there, and we already know that you're gonna make like $200,000-$300,000 off of this house, and we're gonna go ahead and settle it out with the other house. Secondly, it's going to be for investors that are like, okay, I have this other investment property coming up. I know that this is a great deal. So while we're working on that deal, we could go ahead and get you some funds to go ahead and cover the down payment for this one. So this is just, helping one down payment for another one. We're getting ready to sell this place for another place. So bridge loans, you could go up to $2.5 million on a bridge loan, which is kind of a crazy amount. Let's just be honest. It's a really high amount. You know what? I kind of take that back. I guess being a high down payment is pretty much relative to whatever lifestyle that you're dealing with. Some people, $2.5 million is a drop in the bucket, and to other people, it's the world and some. So it's really relative, but you could go up to $2.5 million to cover this down payment that you're trying to go from one property over to the next property. The minimum credit score on this is going to be a 660. So you need at least a 660 credit score to go ahead and get approved. Now, some people are going to be like, oh, well, I have a LLC and an S Corp that are going to be tied in, and how does that work? Well, that's going to be in another video, but we'll go ahead and deal with regular credit scores for now. Now, as far as the program in itself is concerned, there is, like I said before, you can go up to 3 years. Now, in that 3 years, you do have interest-only options available, which ideally is a really, really good way of kind of dealing with it, so you don't have to be paying so much out of pocket. That's a personal opinion on my end. Of course, it's your world. You could go ahead and do whatever you like to. You could do principal and interest. It doesn't really matter. But why? I mean, if you're closing on one and you're going to another one, don't you want to keep everything as low as possible to begin with? Unless you are actually anticipating on going to the full 3-year term, which not sure why anybody would. This is a higher price loan, just so you know. And then I guess your next question is going to be, how high of a price loan could this possibly be? Well, 660 is the credit score for the bare minimum. 660, and then every time your credit score goes a little bit higher, you do have a rate reduction. A rate reduction would depend, like let's say for instance you had an 800 credit score, you could go to 4.5. If you have like a 660 credit score, it's going to be 5.5 to 6. It could fluctuate. Now we're in February 2022 right now, so I'm not going to knock up any rates. This is not going to say any of those because first of all, highly illegal to give any rates right now. You have to give like clear cut, like if I'm going to give that type of information, I would want to give you that information myself on the day that you ask it, not from the day that we have it on this video, because everything changes, especially right now with the way the rates that are increasing and the risk mandates that are being implemented with these financial institutions, especially the ones that we sell to. It could change all the time, but it could be between 4.5 to 6%. Is this something that you want to hold on to? Now, mind you, I've been in the mortgaging business now for the better part of 2 decades, and it's been a really, really long time. Bridge loans, I've seen them at 20-something%. Now, there was something a long time ago that was, they're trying to counter inflation when it came to the Vietnam War because they just dumped so much money. Mortgage rates, and a lot of people who tend to forget this, and I don't know why, but people tend to forget that we were at 19% interest rate at one time. That was crazy. This is not me trying to show my age or anything like that. I'm not that old to be around in the Vietnam War, but of course, me being in the mortgage industry, you have to be a bit of a history buff to know exactly where we are, to see where we could possibly go to. In order to know how things are going to progress, you have to know what happened before and how to go ahead and curve whatever that craziness that we have going on right now, which is inflation, and it's going nuts, but it is what it is. So there are going to be certain caveats to this. If it is going from one investment property, it could only be to another investment property. You cannot do an investment property to a primary. If you're going to do a primary, it's going to have to be a primary to primary. It can't be a primary to a second home. It can't be a primary to an investment property. It has to be even. One money in, one money out, and it just has to make sure that the property is going to be, the loan to value on that property is going to cover the amount that we're asking on the bridge loan. So we have to make sure the proceeds that we're going to get on the sale of this property is going to cover the amount that we're trying to go ahead and push on the other end. Now, the great thing that's part of the program that we offer is that even though this is kind of like a more higher interest loan, and this is only a temporary loan, this is like just, asking somebody to float you the money just until you could go ahead and get into the next property, is that there is no prepayment penalty. So if you come into it and you're just like, 2-3 months down the road, you have some money that just came in and it could be from something else, you could pay it off, no worries, no nothing. By all means, have at it, get on with it. Now, the interest only, like I said before, Texas does not approve that interest only on this type of loan product, but I think we pretty much covered the highlights on this one. But if you like the content, if you like a little bit of stories that I give along with these two, please consider hitting a like, subscribe, comment, hit the little ring icon so you know the next video that we make. And my stuttering self trying to gather my thoughts and making these horrible videos. I need to get better at these. I swear to God, I really need to get better at that, but I will. But for up to 50% commission rebate and for any mortgaging assistance that you might need, link in the description below. Help us help you out. We're just making these videos honestly to help people understand how much money they get, the options available to go from one to another. You could actually take this into a way that you could invest into real estate and get yourself from one to another. This is just the world that I am trying to create for you psychopaths. Thank you guys for watching. Until next video, guys.